Has Bitcoin's decline weakened? If you're interested in knowing more about this, please keep watching. I warmly welcome all of you to join our WSOT team. According to the rules, the larger the team's size, the more advantageous it is for the team. Currently, we have the largest number of members in the CN teams, with 546 people leading the second-place team by more than 200 people. In the previous year's competition, we were once the top team globally, and even secured the top spot in the CN region. So, I invite all of you to join our WSOT team. Together, we can share the $8 million prize pool. Now, let's get back to the Bitcoin market. Starting from the daily chart, if we make a short call in this recent downtrend, and we are employing a right-hand side short strategy, we will feel tortured holding the short positions. As you can see, for a right side short, we need the price to break below the upper range, around 29,500 to 29,600, to have a chance of making a short call. At the current price, it is almost a break-even, and there's no profit left to be made. If you short sell it based on a right-hand side strategy, you won't gain any profit shorting at the downside breakout here. Let's take a closer look at the candlestick pattern. Let's observe the last 4 candlesticks. What signal can we get from these candlesticks? Let's look at these 4 candlesticks. Let's draw them in white to make them unbiased. Although there are many candlestick combinations that you might know, I don't remember them. I prefer to redraw the candlesticks as a single candlestick to assess the strength of the market. This avoids the need to memorize various candlestick patterns, as they might have different names, but similar combinations, leading to confusion. If we redraw these 4 candlesticks as a single one, what will it look like? It will consist of 4 parts: the opening price, the high price, the low price, and the closing price. Hold on. I didn't draw it nicely. Let me illustrate this with a straight line. This candlestick has covered the price levels it hit. Let's draw the body of the candlestick. This represents the opening price, and this is the closing price. Suppose it's the closing price. In that case, the candlestick will be like this. Of course, it's a bearish candlestick, as the closing price is lower than the opening price. So it should look like this. Now, if we see a candlestick like this, what does it mean? You will notice. Okay. Hold on. Let's draw it, too. Then, let's mark the level clearly. This white horizontal line represents a clear support level. We have this kind of candlestick formation above a support level. What's the candlestick known as? Obviously, it's known as a pin bar. Specifically, if the lower shadow is at least half the length of the entire candlestick, it indicates that there is support below. In the context of the current downtrend, encountering this situation is not ideal, and caution is required, especially for those holding long positions. In the upcoming market movement, if the price manages to move back above the white line, approximately 29,700 to 29,800, and stabilize, it could pose a significant risk for the bears. We've just got a downside breakout recently, and then the price bouncing back above it during the pullback would render the previous downtrend invalid. So, if the price returns above the original support in the short term, it could be quite precarious for the bearish traders. As for myself, I'm not taking any short positions. Well, here, some might think of it from a bearish perspective. I didn't make a short call, and nor do I have a bearish view of it. I don't anticipate shorting opportunities. However, some bearish traders may view this as a retracement, where the previous support now acts as resistance. But personally, I don't share that perspective. If we talk about a good retracement, a healthy one, it should look like this. I believe there's no better example than this one. Let's take a look. At that time, we experienced a smooth downtrend from this point, and then a subsequent pullback. Before the start of the second wave of the downtrend, this rebound happened to be a perfect 382 retracement, hitting the 38.2% Fibonacci level precisely. As you can observe, this rebound only accounts for 0.382 of the previous downtrend. If we look at the current market situation, you'll notice that if we only consider the subsequent downtrend, the current amplitude of the rebound is already quite substantial. This is not a very favorable sign for a downtrend movement. The best signal for a downtrend is to witness a very weak and feeble rebound, which doesn't seem to be the case currently. Moreover, the downtrend candlesticks are relatively short in length. Let's also take a look at the volume. A rebound like this is standard. We see a significant increase in trading volume when the price drops, indicating strong selling pressure and deep price declines. However, during the subsequent price increase, the volume shrunk significantly, and the price gains were limited. This certainly raises concerns about the strength of the rebound. The rebound was weak. Now, if we examine the current condition, looking at the current volume performance, we will notice that the bearish candlestick doesn't stand out too much, at least in the recent market conditions. Although the following bullish candlestick is smaller than the previous bearish ones, when we consider the three candles together, the overall volume is not small. Thus, I believe the current downtrend is not progressing very smoothly. If we switch to a 4-hour chart, moving to a smaller time frame, we can see that although it's not necessarily an excellent bottom fishing opportunity at the moment, as the long signals haven't emerged yet. For the bears, there are signs of exhaustion. How can we detect this? You can notice that during the previous downtrend, we had a very long and smooth bearish candlestick with a large body. Also, there was significant volume during the decline. As the price underwent adjustment, it went through a sideways consolidation, evident by the fact that the previous high wasn't broken. This kind of repeated resistance test can be a good short selling point in the short term. However, I personally don't engage in short selling or short-term trading. Back when I did short-term trading, this would have been an entry signal. Now, looking at the recent downtrend, from this point to this point, it's also been quite sharp. But the continuity is not the same as the previous long bearish candlestick. The subsequent pullback has been more of an upward adjustment, which is weaker compared to the sideways consolidation earlier. Because when the supply is stronger, we'll get an upward price correction with a rebound. Regarding volume, there are some. It is not necessarily a good long opportunity at the moment, because it's really a left-hand side trade. It's too much of a left-hand side strategy. But it is true that the downtrend is showing signs of exhaustion. If we see a good bullish signal in the future, I will definitely take a long position. Nevertheless, we cannot rule out the possibility of further downward movement. It's possible. Just because there is exhaustion doesn't mean it can't continue to decline. We know that waiting for clearer signals before entering a trade is a more prudent approach. Now, let's switch to the 1-hour chart. On the 1-hour chart, as I mentioned in yesterday's live session, I said that there is resistance above the current position. Over here, it was a resistance level. In the live stream, I pointed out that if the price manages to re-establish itself above this level, short positions could become riskier. As you can see, several spots have acted as resistance until the price broke above here and turned the previous resistance into support. Although there hasn't been significant further upside movement, for those holding short positions, it definitely carries risks. It definitely carries short-term risks. If you open a short-term position and the price rebound hits this level. Alright, thank you. I warmly welcome you to join my trading team. Also, if you'd like to receive a free trading position, you can click the Bybit link below my video. By completing the KYC and depositing $100, you will immediately receive a $1,000 worth of Bitcoin contract trading position. It's a genuine trading position. And once you claim it, you can join our team and receive additional bonuses. This will allow you to start your trading journey. Any incurred fees can be covered by the trial funds. It's a great opportunity. So I invite you to use the Bybit link below. Thank you so much. Bye-bye.